Consumer is in focus on the back of Q3 earnings, and we are joined by Aasif Malbari, Global CFO and President, Africa, Middle East and International. Mr. Aasif, my first question to you is, in your Q3 business update, you did say that, you are expecting a subdued demand and that margins will be under pressure. How has the quarter gone by? What's worked and what's not worked?
Sure, great. No, so I think, thanks for asking that question. I think, firstly, what's working? I think at a strategic level, a lot is working. So the structural actions which we're taking, the new products which we've introduced, I see a lot of stuff working on that front. I think when it comes to what's not working, I think there have been a temporary tailwinds which have impacted specifically the quarter, which obviously is kind of reflected in the performance on the top line and on the margin shape in this quarter. So yeah, I think that's the way I would kind of put it at an overall level. And we can talk about a few of those.
Right. You'd already, said that margins will not be in the normative range. But, I want to know as to when do you expect the margins to come back to the normal range, considering the kind of raw material inflation that's taking place and the adverse products mix as well?
So, yeah, we did speak about normative range getting breached in this quarter. Yeah, we typically would want to operate the India business at a normative range between 24 to 27%. We kind of dropped at around 22.5% because of the large cost inflation, which we kind of saw. I think it will take a few months for it to kind of come back. Yeah, but I think as we get into H1 FY26, we should start getting back into the normative margin range from an India perspective. If you look at it at an overall GCPL perspective, our margins have been within normative range because typically at a console level, we have operated between 18 to 22%. This quarter, our margins were upwards of 20%. So we were in the center of those, normative global margins. And hence, there has been an improvement in overseas, which has kind of offset the mild decline which we have in India. You just need to keep it in mind that a year back, our margins were on the higher side of that band. And hence, from a year-on-year perspective, profit growths have been impacted.
Understood. With respect to the palm oil prices, they've been on the rise since the past few quarters, and we're aware of the kind of trend that the raw material price inflation has seen in terms of palm oil. I just want to understand that is there a strategy in place in terms of hedging palm oil to keep the margins in check?
So I think overall, if you see in the last couple of weeks, there has been a correction actually in terms of base palm oil. Right. Prices have kind of gone down by close to 10-12% from the peaks which it saw. So there is actually an improvement in terms of that. But the complex of palm oil or the byproducts derivatives, which we utilize in the business of producing soaps, have not kind of followed that trend. So I'm hoping that firstly, the costs will kind of stabilize, if not kind of go down in the next few weeks. We'll have to see how that plays out. As far as hedging goes, again, these are prices which kind of get passed through the consumers. So costs can go up, costs can go down. You can have gains, but you can also have losses. So we do kind of have a specific cover policy, and we do kind of change our covers of some of our commodities depending on the view on the market. But yeah, that remains internal to the company.
Got it. One of your competitors said that, there's not enough money in the hands of a common man, and hence discretionary spending is overall going down and people are moving towards smaller pack. Is this a trend that's being observed by you also, because you are more into, good night and stuff, but they're more into food?
So I think I would say that in the last few months, we have seen some bit of a slowdown in urban consumption. And I think various different companies have spoken about it. So there is a bit of a stress in terms of urban consumption. We hope that that's kind of temporary. We hope that with some bit of inputs which come from the budget into the urban consumer, it kind of helps getting consumption back in that segment. Yeah, so hoping that that's kind of temporary. But when it kind of comes to, I would say, lowering the pack sizes, That's something clearly companies keep doing to kind of increase penetration and reach. We have also kind of put in various products which allows us to kind of reach more consumers and get growth. So as we speak in this quarter, we've launched Air Pocket at 30 rupees. The Air Pocket product has been doing extremely well for us. It has grown extremely well. We are reasonably confident that with a easier access pack at a lower price, it will kind of reach more consumers. So yeah, we do definitely look forward to driving products which can be more accessible and hence kind of reach more consumers.
Premium products in the household segment saw a slowdown. Now, is this just the household segment, or is the overall slowdown in premium segment being observed? And is this on account of a higher base?
No, so I think firstly, if I have to speak about household insecticides, I think our specific products which we've launched have done very well. You know, Incense Sticks did extremely well. It's been gaining volumes for the last couple of months. We've now actually got high single-digit share of that category, and there is still a large kind of volume to be kind of gained as we go forward. A new product which we've launched has been gaining the share, or there are early green shoots in terms of how it's performing in the entire, I would say, electric space. We are hoping that the new product, which is significantly better than all the products in the market, will again continue to do well. But yeah, I think the overall growths have partly been impacted by seasonality and partly been impacted by a bit of the urban slowdown, which everybody's kind of talked about. Yeah, I'm hoping that that's shows some sign of improvement as we go through, because I think the larger middle class urban is a large contributor to the overall consumption and GDP of the country, and yeah, we should see some kind of improvement in those trends.
Right, and what's the kind of range of price hikes taken this quarter, because volumes were flat? So what's the volume versus value divergence?
So overall, as we said, while our organic volume growth has been flattish, we've delivered an organic sales growth of 6%. So we have seen that level of kind of year-on-year price in the market. We do kind of expect that for the next few quarters, we will see like a mid-single digit pricing benefit in terms of revenue come through.
But then, what's the kind of range of price hikes that has already been taken, and what is the kind of price hike that you expect going forward?
Yeah, I think it's been on an average 4 to 5% kind of price hike for the India business is what we've kind of seen. So.
Okay, and so you expect price hikes going forward as well, considering the raw material inflation?
We will kind of continue to hold at this level of kind of increase, and there will be a few more price hikes which will come on some categories.
All right, Mr. Malbari, one last question. Modern trade is gaining, as per your con call, and this is due to pick up in the e-commerce and quick commerce space. But general trade is kind of losing share, and you did share and mention that you might make changes in your distribution mix. Tell us more as to what's the kind of strategy that you'll be adopting.
No, so I think definitely there is a little bit of channel rebalancing which is happening because of higher growth happening in the larger, modern trade, e-com, quick commerce space. Right. As a result of which, we definitely then kind of ensure that we keep in mind overall distributor profitability and kind of bring inventory levels at a level which is kind of efficient for everybody to operate and drive efficiencies. So those are, I would say, smaller tweaks which we do, but nothing radical or nothing drastic, I would say. Okay. In any case, the business has been doing well and has been growing well, and that really benefits the GT distributor also, because of it. I think we have been growing much faster than the rest of the FMCG players, and that's kind of positive for our GT distributors.
Understood. Well, Mr. Malbari, thank you so much.